All right, let's dive into the Q2 2025 earnings for Flowers Foods. Now, you might not know the company name right off the bat, but I promise you, you know their brands. We're talking Nature's Own, Wonder Bread, and of course, the fan favorite Dave's Killer Bread. Well, their latest numbers just dropped, and honestly, they've created a really fascinating puzzle for investors. So here's the paradox in a nutshell. Flowers Foods reported a profit number that actually beat Wall Street's expectations. Usually that's the recipe for a fantastic day on the market. But instead, the reaction was fast and it was negative. The stock price took a serious tumble. So what on earth is going on here? Okay, let's start with the good news because there was some. On the key metric of adjusted earnings per share, they delivered 30 cents. The experts, they were only predicting 29. Now, it's a small beat, just a penny. I get it. But in the world of investing, a beat is a beat. It sends a signal that the company is managing its bottom line really well. And yet, here's the other side of that coin. By the time the closing bell rang, the stock was down over 5%. So investors clearly weren't celebrating that profit beat, they were selling. The question is, what did they see that turned good news into such a bad day? That's the story we're going to unpack right now. To solve this little puzzle, we first have to understand the powerful challenges, the headwinds, as they say, that Flowers Foods is sailing straight into. You know, that profit number, it only tells part of the story. The real concern, it lies a lot deeper inside the business. The anxiety for investors, it really started at the top line. Revenue, that's the total amount of money coming in the door, missed the mark by 2%. And the driver behind that miss was a huge red flag. Their core business, traditional loaf bread, saw sales fall by a whopping 6%. On top of all that, they're facing tougher competition and their costs are going up. This is where the worry really begins. This contrast right here, it perfectly captures a massive shift in what we are all buying at the grocery store. It's like a tale of two aisles. On one side, that classic loaf of bread is in decline. But on the other, these better-for-you categories like organic and keto, they're growing. It's crystal clear. Shoppers are changing their habits. And listen, this isn't just some small temporary trend. The company's own CEO, Ryan McMollan, he called it a generational shift on their earnings call. I mean, that is a powerful statement. He's basically acknowledging that the very foundation of their biggest market is changing, and the company is heavily exposed to the part that's shrinking. But hey, Flowers Foods isn't just sitting back and watching this happen. They have a strategy. They're trying to pivot and meet this new consumer where they are. This is where the company's future is really being shaped, so let's see how they plan to pull it off. And this chart, it really shows their success in those high-growth areas. While the overall bread category actually shrank by 3%, their premium brands are absolutely thriving. Dave's Killer Bread units are up 4%, and their gluten-free brand, Canyon Bakehouse, is up a massive 12%. This proves they know how to win in the segments that are actually growing. Now, the crucial point here is that this pivot, it's already happening. Their more profitable, higher-margin branded products now make up 67% of their total sales. That's up from 64% just a year ago. So they are actively changing the DNA of their business to line up with where the consumer is heading. So here's their official game plan to fight back against that generational shift. It's a 5-pronged strategy. It's focused on innovation, expanding their powerhouse brands like Dave's Killer Bread into totally new areas, and making smart acquisitions like the natural foods brand Simple Mills to speed up their transformation. Okay, so we have a clear problem, that generational shift, and we have a clear strategy to address it, which of course brings us right back to our original question. With a plan in place, why did the stock still fall off a cliff? And here it is. This is the smoking gun. The company lowered its financial forecast, what they call guidance, for the rest of the year. They cut their expectations for sales, for profits, for everything. To an investor, this is a blaring signal that, for right now, the headwinds from that declining traditional bread business are blowing stronger than the tailwinds from their growth strategy. And you can see exactly how the day played out. Before the market even opened, as soon as that guidance cut was released, the stock was already down over 3%. And then, as investors listened to the call and digested the news, the selling pressure just kept building, leading to that sharp drop by the end of the day. So, why does all this matter? What's the takeaway? It's because the market is essentially weighing a promise against a very real current problem. Investors can see the long-term strategic pivot, and you know what? They might even believe in it. But they are worried, very worried, that the plan just won't deliver results fast enough to make up for the damage being done to their core business right now. And that leaves us with the ultimate question for Flowers Foods, and really for anyone watching this company. It frames their entire future as a high-stakes race. Can their new, innovative, fast-growing brands generate enough momentum to actually outrun the decline of their old traditional business? The answer to that question is going to determine everything.